We're ready. Okay, guys. Welcome everyone again to another forum by Elliott Wave Forecast. Today is September the 6th. Today is September the 6th, 2012. And we're going to try, like I always say, to be as a specific and and clear and to the point for you guys to what we see for tomorrow non-farm payroll or tomorrow trading days. That's the daily dollar, and all you guys need to know, uh, like we've been saying, is that we know that we're gonna get 278. Now, if we're gonna get in this path or in this path is completely debatable. In other words, it is not clear which way we gonna go. All right, that's not clear, and we don't know. Honestly, we don't know. To tell you the truth, we do not know which way we're gonna go. All right, so we gotta be ready. We gotta be ready. Like I told you guys last night, we gotta be ready because otherwise, you can be ending in the wrong side of the market. The structure, it has separation. I mean, the structure from here, it has separation, and the other side is showing divergence. I know that I had said this several times, but this RSI showing divergence from there is an impulse from this peak. From this high is an impulse. And you guys need to understand that. So that give you guys two paths. Like I say, a simple AVZ, which is a 1, 2, 3, 4, 5, three backs 1, 2, 3, 4, 5, or a double zigzag ABZ, ABC, ABC. If you notice in this one, this overlap, and that's why the separation that we're getting on the market between the first bunch of wave and the second bunch of wave, that is what makes us to believe that the scenario when we are in an impulse in the dollar, it is possible. And then if it's an impulse in the dollar is going to trade like this. Most likely this triangle ended already right here as a contracted triangle. And we're going to go to 80-50 tomorrow. Maybe we're going to put back and then continue lowers. That scenario is there. I mean, that scenario is there. Is present right there. The other scenario is the one that we need to be aware on it. That is that the dollar did a triangle B way, and that is going to end right here. I mean, so you got to be aware. You got to be aware of this scenario, because this scenario is more dangerous and consequently can get you in the wrong side of the market. But we know what we're doing in that degree, and we won't be, I mean, we won't be having any issues. So be aware that one of the two scenarios is present. Again, if we go to the daily chart, it's either this one or it's going to do the impulse. We should know very soon. And I was thinking that we should know within the next, I would say, 48 hours, we should know that within the next 48 hours, we should get the answer of that. Tomorrow is the non-farm payroll, and maybe the market move. All I'm saying is that looking at assets like the UK fix it, the looking at the S&P, the dollar CAD, the CAD yen, all that series of assets, I tend to favor, honestly, this scenario, because I don't see looking at this charge. I don't see looking at this charge that the dollar is gonna rally. I don't see looking at this charge that the dollar is gonna rally. So what I mean is, looking at this is risk on. The same if you add to this charge, for example, the S&P, the dollar CAD, look, same day. So looking at the CAD is gonna trade lower. Then if you add to the CAD, let me put it here, the S&P 500 looks what? It's bullish, very bullish. So technically, with that in mind, that gives me because all these indices here needs to make three ways. In other words, it needs to be more outside. And that goes with the idea of that how come the dollar is gonna rally from here. So all I'm saying is, guys, in conclusion here, is very simple. You guys should be ready for the most bearish dollar scenario possible. That is gonna be a good pullback. Absolutely, that's gonna happen. Absolutely, that's gonna happen. Another scenario is that the dollar is doing a diagonal from here, and it is A, B, C, 1, 2, and it's gonna do like a type of diagonal, something like that. But like I say, and I repeat it for 1,000 times, there is no reason to buy the dollar until you see until you see that the trend change. So you gotta keep selling any rally in the US dollar. You gotta pay doing this. This is the 8 hour of the dollar. And look, if you add a pair like the Euro Aussie to this charge, you're gonna get surprised what you're gonna find out. Look, this is the Euro Aussie. And you guys gonna see how this pair is rallying. But this pair is rallying in an impulse. So that means that this pair needs minimum that structure there. And then if you put the euro, dollar also, guess what? It's rallying also. So how come the euro is gonna drop when the Euro Aussie needs to rally? You see, details like this make you think that the impulse is the one that is what it is of course the whole world is bullish the dollar, and they unfortunate they won't become bearish the dollar until they don't see that the dollar is around this level. And that's the issue, John, that right there we're going to start buying the dollar. You see what I mean? So I'm expecting the dollar, I mean, easily, I'm expecting the dollar to finish, I mean, a cycle and rally in 3 weeks. And then it's going to be like I explained to you guys yesterday. This is right here. If you guys look at this, you don't get divergency here in the 4 hour, but you don't get divergency neither here. But from here, you getting divergency there. That means that that's an impulse. And you got to keep setting the rally in the dollar as far as that line, black line there, is in place. Otherwise, you're going to be in the wrong side of the market. Do not buy the dollar. It's as simple as it gets, all right? That's enough for the dollar. I mean, I keep favoring this scenario. And the good thing is that in the popular belief, in the social media, nobody is showing the impulse. Only Elliott Wave forecast. I guarantee you that. Yes or no, John, that you are a king of the social media? Nobody's showing that. And that's good. That's good. Because that means most likely that we have the truth, to be honest with you guys. Now, enough for the dollar. Let's go to the UK right here. This is the UK fix it. Look, 1, 2, 3, 4, 5, 6, and we need a 7. This pair needs to break these highs. Look, everyone have done that. If you look at the DAX, S&P, both of them already have taken similar highs. So with that in mind, we gotta use this pair here as a proceed or an indicator that how much the risk rate is gonna stretch. I mean, this pair, if you remember, let me see if my good friend Gret is there. If you remember Gret, when the euro, the S&P was here. Let me see if I do remember exactly. When the S&P was dropping here, we say that it's going to bounce because the UK did not broke this high. Remember? This pair, this pair always go deep in the correction than the rest of the world. So with that in mind, it's a buy, looking at high about 6,000. I told you guys over the weekend to buy it, and the target should be, in my opinion, the 1.236 here. Which is the 1600 area. So until then, I think that the risk trade is a buy, and consequently, I mean, it's a domino effect. If you put the dollar cat right here, look, same day the low, that means that the cat is gonna keep trading lower very much until that happen. So don't be surprised to see 1488 in the S&P 500 in this rally. But like I say, contrarians to everyone, I can tell you something. there is no reason, zero reason to buy the risk trade, to sell the risk trade. Don't listen to nobody. Please listen to us. We know what we're doing, and we are in the right side of the market when most of the world is been buying the dollar. We've been telling you guys, sell it, right? Now we gotta wait for the next leg down to buy, to the next recovery in order to buy. Exactly, Caroline. Barry's got more, is very smart point. How old you are? I'm sorry to ask you. You're very savvy with your comments. All right. So sorry to ask your age, but many people don't like it. But you sounds very savvy. So technically, that's what I'm trying to say. Another point that I want to make is the Cayenne. Look, maybe it's gone, and maybe it's gone, and let me see right here on the Cayenne. It hasn't invalidated yet the trade. We're going to leave it there, but it looks like it's gone. Another one that I recommended to buy in the pullback is the Aussie yen. Aussie yen, I recommend to buy on the pullback. Don't touch neither side, in my opinion. The Aussie dollar, I don't know what's going to happen with the Aussie dollar. I mean, I don't know. So listen, another thing right here with the CAD and the Cayenne, how well correlated it is, and lower. To be honest with you guys, all those risk assets, they are lower in nature. So we gotta leave it. We gotta sell it. We gotta buy risk onto the UK fix it, break the high. And this is something that I want you guys to start looking at it. This is the one that is gonna lead you. Is the one that is gonna show us the path right there. I want you guys to think about it and keep it in mind right there. All right. I want you guys to look at that and keep that in mind, because that can be very, very possible also right there. All right. I'm expecting US dollar strength, to be honest with you guys, very soon in 3 weeks. I'm expecting US dollar strength in 3 weeks. And I was looking now at the euro dollar, and maybe the dollar is leading the US dollar in some degrees. If you put the US dollar here, and when I did send the trade the other day, this is in the 8 hours. You don't see it here. But if you go small, like in a 1 hour, and you put the closing line, it is possible. Well, this is the Euro Aussie. It is possible that from this low that happened, let me take the dollar for a second. It is possible from this low to have a leading diagonal. 1, 2, 3, 4, and 5. That's very possible. There is 5 swings, and there is divergency in this swing, in my opinion. So we got to be careful. Maybe, and then only that, if you do reverse here, the high there is enough, deep enough to be the end of the cycle. So we gotta be careful. This lack in force is lacking momentum, and I'm expecting a move to 125 very soon. All right, and we gotta be careful right that. Don't get overexciting. What I mean is a trader needs to know when to reset. A trader needs to know when to step outside and say, I'm going to wait now for the market to become easy right again. All right? That's what I'm seeing, and that's what I got to tell you guys. I mean, these two pairs, when I mean, these two pairs, if you look at it, the euro and the dollar, they were together until here. Better say up to here, they were together, and then the only difference is that the euro makes a new high here, and the dollar do not. That's something right there. It's telling something, and you need data. You need data. You need data to get a better fitting. But at the end of the day, I know that it's lacking momentum. It's lacking momentum, and either the euro is on the flat or the dollar is leading. What I'm saying with the dollar is leading is that maybe the dollar ended the cycle here. Remember, the cycle and the dollar is in need of the euro to make an extra swing because it's coming from wave two, and now we have a low, and the dollar can rally here in another 3 ways, and they get together when the dollar get here and the euro get here, 125, 81.80 before continuing lower. I mean, all right? So that's the way it is, and that's the way we like it, to be honest with you guys. That's the way it is, and that's the way we like it. So keep that in mind, those two scenarios there, because I'm expecting a pullback in the euro and a rally in the dollar, most likely by tomorrow, to be honest with you. What I mean is that maybe this cycle ended here, and this wave 3 ended there. All right? And now, because I think the trend is down, now it's gonna count here. It's gonna rally here, 81.69. The euro's gonna go to 125, and then they're gonna do this together again for the final move down. That's a possibility there, And that's a possibility that correlate very well, because I tend to believe that the euro is in some type of ending diagonal. And euro Aussie also needs those to move before it becomes weak. Don't you agree, Greg? All right. So let's leave it there, guys, and see you guys then later on the room. I'm going to get ready now. I think it's clear. I got to do my conclusion. I believe that I still I favor that the most bearish dollar count that you can have, which is the imports. Onto the other one proves me wrong. You got to keep selling. Bottom line is, like I always say, Elliott Wave is very suggested, and consequently, you got to sell the trend. You got to buy the trend, whatever the period is, all right? So that's what I'm expecting. This count goes very well with the euro now ending like a type of diagonal here. You can see now if the euro do end this, the euro is going to end consequently this cycle. The euro is going to trade to 25, higher, lower, higher, to finish the whole move. And then it's the same amount of swing in every single pair, the euro Aussie, every one of them. All right. So, but I do see a lack of momentum right here. And consequently, I see 5 swing. 1, 2, 3, 4, 5. That's the trade that we took. It was playing the ending diagonal there, the ending diagonal. Technically, you have 3 highs. 1, 2, 3, and 2 lows. So that can be an ending diagonal to the peak right there. And not only that, this low is the 3802 to the peak right there of this move. So maybe we're ending wave 3 of 3 in the euro. The same with the dollar. All right? Okay, guys. So see you around. Let me get ready here for the next hour of seminar. It's going to start in 30 minutes. Thank you, guys.